see you here as always. And let's have a look at what's happening across the news wires today. And of course, see if we can find some charts which might be of interest. One thing we'll do straight away is pop up this little important message here just to remind you that this is for educational purposes only. Please make sure that you do your own due diligence on anything you see or hear. Make sure you follow trading plans and, of course, manage risk on every trading action. And that important message. I know it's a bit like an aeroplane safety thing, but it is really important that you do that. Let's pop on to the headlines. Let's see what's coming across the news today. There we go. There we go. Okay, so we did see small losses on Friday for the major indices after a weak jobs report. That non-farm payroll is coming in around about 50,000 shy of expectations, but still within reach of record highs. You'll see when we pop onto the charts in a moment. Overnight, Ukraine and Russia are back in the headlines. We had a major drone attack, the biggest so far, from Russia on Kiev, which killed a few people and, of course, damaged the parliament buildings as well. This has created a little bit of consternation globally, and Trump, as he was about to get on a helicopter, threatened that sanctions will be imminent. It doesn't look as though that Alaska meeting 3 weeks ago had any impact at all, and Putin just carries on doing whatever he wants. Onto the futures, they are mildly high today, which would reverse the small losses on Friday if they hold. Asian markets are mixed in early trading. ASX was slightly up. European futures pointing to a slightly lower open. US dollar index remains range bound. We'll check out charts and all of this in a moment. Gold test a staggering 3,600 level. Well, again, we'll have a look at charts. That just keeps on going up and up. Copper is near bottom of a short-term range. All is soft and breaches support to hit 3-month lows with $60 in the crosshairs to the downside. One worth looking out for. Bitcoin's range bound, still under that $112,000 resistance. Now, on the news front, earnings and trade news are obviously going to continue to be important. Japanese GDP was slightly higher than expectations when it released this morning. We've got Chinese and German trade balance today, and German factory orders due also. Through the week, we've got US PPI on Wednesday, but the headline act is the CPI on Thursday, which comes out at the same time as the weekly jobs report, which will gain more importance because of that weaker non-farm payrolls on Friday. Okay, so those are your headlines today. Let's just see. Let's just pop on to see if we can pop onto the internet at all. Is it going to play today? It is going to play today. So that's where we were on Friday. So you can see there, just the Russell was slightly to the upside because, of course, that soft jobs number made essentially locked in that September rate cut when the Fed meet next week, I think. And the Nasdaq also was fairly close to neutral. If we look at the futures, as I said, we are seeing a slight uptick in the futures. These have come off a little bit, but European futures are looking fairly healthy. The Nikkei is looking good in this morning's trading. Two reasons. First of all, we had the Prime Minister is to step down. That doesn't appear to be a bad thing, looking at the markets. And of course, that GDP number helped a little bit. ASX has dropped off a little bit down, almost 0.5%. And Shanghai are looking shy. Let's just have a quick flick through the data as we can. So you can see there, we've got that GDP number coming out of the Q-on-Q number was 0.5 rather than 0.3, which was expected. That trade balance number out of China will be important in terms of looking at the impact of tariffs, potentially. And then we've got the German trade balance later. If we look later in the week, then very quickly. As for tomorrow, we've got very little of any significant note. It's really Wednesday things ramp up. We've got Chinese CPI and PPI in the morning, and then the PPI number out of the US in the evening. Of course, that is interesting simply because usually they're the other way around. Usually the CPI, which we see on Thursday, is first. We do have the EIA data coming out, the crude oil inventories on Wednesday also. That is going to be important in terms of where gold is now. Thursday is quite a big day. We've got the ECB rate decision, which is expected to pause that CPI number, as I've talked about, and of course, that weekly employment number. Flicker on down, we've got GDP number coming out of the UK. We are expected to tick downwards. That won't be very popular if it hits a negative number, but we shall see. And then on Friday, we've got consumer sentiment numbers coming out of the US. So quite a busy week for data, but obviously Thursday is the key day in terms of what might happen next. Let's have a quick look at the ASX because we can. As I said, sort of slightly down. We were pretty. We're seeing some sell-off in resources. Tech's doing well this morning. We've got little shy of 2-to-1 decliners versus advancers. Got sector split. Okay, minus the pop-up box. Then you can see here that IT are outperforming materials. Actually pulled up a little bit since last I looked. Energy is under a great deal of pressure because of oil. I'm going to have a look at the chart in any minute now. So let's pop that on. Let's have a look at the Nasdaq. Sorry, the S&P 500 to kick things off, and you can see how close we are to record highs. We did hit them slightly on Thursday over that 6,500 on the futures contract. We're just trading beneath that in today's trading, but you can see on the shorter time frame we are higher than we ended up. You can see the response to that non-farm payrolls initially, but we recovered at least half of that by the time the market was done. Nasdaq's looking even stronger today. Just a little pullback in the last hour, but again you can see the NFP result and then that bounce again, which retraced about 2/3 of what I'd lost, on the back of probably interest rate thinking. Because of that, we saw this red candle on the US dollar index. You can see how it tested this support at 97.50. We are slightly up today, but off the highs. But gold doesn't seem to care. 3,600 is the key level there. You can see it's trading around about 35.96 at the moment, in a really short-term range since that bump up on that non-farm payrolls number. So that's the level to watch. Really important psychological number, of course. I did predict that we might see 4,000 by the end of the year if this carries on as it is, but that's a bit of a stretch for sure. As for copper, holding on to support at around about 455. Not really much going on there. Oil was the other main story. Although there is some recovery this morning, you can see that breach of support at 62.95. Let's call it $63 on this particular futures CFD contract. We'll be looking for a move below that level again, possibly down to $60 test, which is a really important level. But as I said, this was a low close not seen since this candle here on the 30th of May, so 3 months low on oil. Bitcoin just doesn't seem to want to push through that 112,500 level. At this stage, it's pretty neutral for the day, not much going on there. Let's check out some FX charts, and you can see there a nice pipe formation on the 4-hourly chart on the US yen. So we did gain initially, but now we're starting to sell off. So that strength in the USD looks pretty flat. And we could even close this gap if we continue to the downside. So maybe watch 147.88 for a potential 40 to 50 pip move down back towards this sort of 147.40 area. Could be on the cards if we get continued selling. As for the Euro USD, we did see that spike up following that non-farm payrolls, but sell off at the back end of the trading session. Now we're sort of stuck. We're looking to see if we've got a bottom here. We've got a move that looks interesting uh, using this 117 as support. If we do get some more buying, there's possibly a reversal happening here, which corresponds to this here. So we could get a move up, but it's only likely to be 15 to 20 pips before it gets caught up around this level again in the first instance. As for the euro yen, again, yen weakness early on, but that's recovered. You can see there we have that gap up, as we often see on a Monday across many asset classes through this key level at 173.20. So we've actually pulled back around about 30 pips from the high today. So we'd probably keep an eye on 173.75 to the upside and that level at 173.21 to the downside. Aussie yen was probably the chart that caught my eye most in early trading, but it just seems to have come off a little bit. If we look at the 30-minute chart, you can see that in all its glory. Got to a resistance, and it is called resistance for a level. So it's popped up to 97.28, making its way back to 97, it looks like, on this chart. There's your 97 level. So it could well come down and test this, and then we'll be in this range. High probability trade, possibly if it breaches 97.28 to the upside. Why is that high probability? Well, if we look at the hourly chart, the 4 hourly chart, and the daily, you can see that level is really important. So I would say that's worth keeping on your radar. It doesn't look as though anything's going to happen over the next few hours, but perhaps this afternoon when the European markets open, that might be interesting to keep an eye on. So that's my FX chart of the day. Also, sort of interesting was the Aussie Kiwi early on, but that seems to have given up the gains it had early on, trading around or got stuck around 111.30. Maybe it's no, maybe a 15 to 20 pip move up to retest these highs if we get some buying into Aussie Kiwi. Onto the ASX, a few shining lights today. You know how much I like this stock. It keeps on being a chart of the day, and it continues again. I did suggest this was a $50 stock potentially, but you can see that move now through 46, 20, 38 in today's trading. That's a move up in excess of 5% to 48.31, and trend continuation in play. Just be aware that $50 could be a pause point just because it's one of those nice round numbers. NXT we sort of liked last week following this earnings bump, but since then we've been stuck in this range of around about 66 cents, sort of mid-range now. But those two lines are worth keeping an eye on. It comes back down, could close the gap, goes over 1678. That would substantiate this move that we've had up of late. Paladin's looking interesting today in the energy space. Interesting that oil's doing so bad, but the uranium stocks are doing good. We're through $8. $8.17 looks like a resistance level if we look historically. So that may be worth keeping an eye on. It's not through it yet, but you can see the number of times this level has been important from a technical point of view. Possible move up to maybe 880 in the short term. That would be a very healthy move to the upside. One worth keeping on your radar, perhaps. Worth checking in on the last hour to see if it fits your trading plan, of course. And finally, the lithium stocks are doing very well today. Here's PLS, um, probably the main player in this space in Australia in terms of production. You can see it's testing that 250 level, currently sitting at just below that, around about 247. A breach of this level could see us move higher. May get some traffic around about this 265. So not a massive move up on the card, but nevertheless, technically interesting. One for the long term, which or medium term, perhaps is showing signs that it may be worth looking at. So you've got a 7% move up to that sort of 265 area, and then if we breach that, possibly move towards $3 in the medium term. I'm going to make PLS my chart of the day along with 360 ASX. You've got a couple to keep on your radar there. Moving to the US, EHM chart of the day last week, and you can see the follow through on that. And the prospect of lower interest rates in the US are doing the home builders very well indeed. And Multi-Group is excelling. Interesting, we saw a pop in MU as well. There we go. That's taken us up to a key level around about 132 for this semiconductor stock. If we take that back, you can see how important that level is here, and a potential move to 144 should we get some significant buy momentum, maybe 141 actually. So that is worth keeping on your radar. Also, Zoom we like. Good earnings of late, taking this back up towards $85. And Microsoft, interestingly, up through a support level. We did see keep an eye on $500 as a potential area of interest. Excuse me. Um, that's not worthy. Let me just take a drink. Hang on a second. Sorry about that. Okay, so we're looking at this level here. Around about the low on Friday was temporary support at this stage here, around about 490. That's a key level to keep an eye on Microsoft. Tesla are also worth having a little check-in on. We can see Tesla have breached 350. I like this 363 level. Let's take this back. You can see the importance of it here, here, and here. So technically a very important level. So Psy could be limited on this to that 363. But one thing that's noteworthy is these higher highs. Sorry, higher lows. You can see there. There's the next. There's the next. There's the next. Here, and another one at this point here. So these higher lows suggesting that we are, albeit a slow and bouncy uptrend. But as I said, 363 is the level to keep an eye on at this stage. So there you go. There's your wrap for today. I hope that's given you some things to think about, things to keep on your radar, and of course, I hope you have a wonderful day ahead. Let's just check back on our Aussie yen just to see if it's looking any better. It looks as though it's found a home around about just over 97 at this stage, 97.10. So we'll see what happens over the next, as I said, over the next few hours. But really, just keep an eye on gold, which doesn't seem at this stage as though it's keen to push through. It'll be interesting to see what happens when the European markets open. And of course, the Nasdaq and S&P 500 just pulled back a little bit for right now. There you go. There's your market day ahead. Thank you very much for joining me today. It's a pleasure and a privilege to share some stuff with you. Thanks to Roger and Wayne and Sonia and everybody who's said right in the chat box on YouTube. Thanks very much, guys. You have a great day. I will catch you again very soon. Take care. Very safe. Bye bye.